McKinsey managing director Bob Sternfels had said it was India's century, right?
Yeah.
Not India's decade.
Right.
And I think that part is true.
I think blind test is a great tool. I think, probably all D2C brand owners should do that and really see if customers are able to pick out that there is something unique.
Yeah, without the logo, right?
Without the logo, right?
Firstly, I think a fully 100% D2C business is very, very difficult to sustain. So one thing that is a marker of success for me, do you have the right mix between e-commerce platforms, D2C website and offline? All of us lead very high stress jobs. I mean, we have high stress lives. It is important to have one or two things outside of work that you're deeply passionate about.
Yeah, I feel for all entrepreneurs, cultivating some hobby seriously is immensely helpful.
At some point, I still remember somebody telling me that you have to be X of Y in order to raise money. Yeah, Uber of something, X of something. Now, I think we can actually create those models. I think there is a real opportunity in India now to actually do original things.
Ananth, welcome.
Thank you for having me.
Yeah, absolutely looking forward to this conversation. I think in preparation for today's discussion, I was reflecting on our collaboration together. I think I met you nearly 10 years ago.
That's right.
In the, I think when you joined Myntra as CEO, I think we had this meeting at Saiki's house.
Yeah.
But I was thinking you had this 20 years, nearly 20 years of very stable career at McKinsey.
Yeah.
I'm sure things were very smooth.
Right.
And then last 10 years, this massive roller coaster, and you in particular, Myntra was also going through lots of ups and downs when you joined.
Yeah.
Farm Easy had a, incredible run. Actually, MedLife, right?
Yeah.
Which got acquired by Farm Easy, and they went through lots of ups and downs. Then you started Mensa, which zoomed to $1 billion valuation in 6 months, which is, right. I think, I don't think that record is going to be beaten in India, for a while. And then, we've gone through market slowdown last couple of years.
Yep.
So must be quite something. Now you've just seen in 3 different avatars, so many ups and downs. How do you look at this period versus,
Yeah. So, Mukesh, we've spoken a lot about this, but for me, I think I sort of think of life as learning. I think in learning cycles, right? I would say a very different learning cycle in the McKinsey phase. I think you learn problem solving, you learn people management, you learn new topics every time.
Yeah.
Right. And that was I think the last 10 years have been fantastic in the sense, I think 3 big things at least for me. The first is technology and product. I think, at least before Myntra, I didn't get a sense of how product and tech could change a lot of things. And now I'm a firm believer, I think in Mensa as well, trying a bunch of things which we can speak about. I think the second is power of risk taking, right? I think risk and reward are related. Yeah. And I think being able to take more risk and build, I think has been the other big sort of revelation in thinking through. I think third is, advising a business and operating are 2 dramatically different things. Yeah. I think the problem solving bit is sort of similar, but the decision making, people management, P&L focus, working capital, balance sheet focus is all very, very different. So it's been actually a great learning in terms of being able to operate. So I think for me, the big sort of shifts are product tech, risk taking, and the ability to actually operate. And I think that's been great learning, both to the ups and the downs, right? I think you rightly pointed out, I think Myntra went through also cycles. And then sort of, obviously with the Walmart buy, it was a very high.
Yeah.
And then going into MedLife from there was and I put money in also.
Yeah.
And that changes the equation. And I think that was a very interesting thing. And now I think starting something my own, I think the big thing, and frankly, a little bit from our conversations as well, I sort of now think of this as a 10-year journey, right? Starting again and sort of going that through. So
good thing you're not extrapolating for $1 billion in 6 months or 10 billion in 6 years.
No, I'm not. But I do think we can build a very large consumer company. Right. I think, someone recently told me, which I thought was very interesting. I think valuation is a vanity metric. Ownership is real.
Right.
So I think it's important to sort of think about this as building for the long term, not because of ownership, but just for the management team and the founder and so on, just for stability and saying I'll build it for the long term.
Absolutely. And so let's talk a bit about, Mensa.
Yeah.
So see, when we were at Myntra, we were mostly selling third-party brands, which was majority of the sales. And there were some in-house brands which became more like in some ways labels. Did not really have very, very strong customer pull. Traffic was coming in, and people who are buying. But last 4 or 5 years, we have started to see the emergence of homegrown brands, and you were among the first few people to in some way spot that opportunity at scale, and you assembled a portfolio of brands. I think you were telling me the shirt you're wearing is Dennis.
That's right.
That's one of the brands, which is doing very well.
Yep.
What was the thought process in 21 when you started Mensa? Like, what convinced you that time has come for these homegrown brands which can see scale?
Yeah. So I think 3 big shifts again. Sorry for everybody. I can't get rid of the 3. But the 3 things I saw were the following. One is, I think brand building was fundamentally changing for 2 reasons. The first is distribution is now democratized.
Yeah.
If you are a Unilever, a Dabur, whoever else, right? You needed to reach a few million Kirana stores with a multi-tier distribution system, and that was the mode. Yeah. Nobody else could get to it. Now, by the way, for $2, call it, right? 120, 130 rupees, you can reach 20,000 pin codes in a 2-day period. Now with quick commerce, I guess you can reach in 10 minutes also in multiple codes. So that has changed. So it's leveled the playing field. And therefore, by the way, insurgent brands can actually scale.
Yeah.
So that's one big shift that's fundamental and is here to stay for 10 years. The second is e-commerce is called between 8 and 12% depending on category of the overall retail. However, the consumer journey in terms of research starts now more online. And therefore, brand building has to be more online.
Yeah.
You have to be more social media savvy. You have to build your reputation of the brand online.
Yeah.
Right. So that was the second sort of thesis. The third actually is a little bit from my Myntra and midlife days. I think it's very easy to start something, very hard to scale something. I think the first 20 crores, 0 to 1 creation, or the first even 100 crores of 0 to 1 creation, I feel, essentially it's a certain kind of person and a certain kind of team and a certain kind of resources.
Yeah.
But from 20 to 100 and 100 to 500, 500 to 1000, you require tech. You require to go from push to pull.
Yeah.
You require different kind of person and team and capabilities. You require working capital. So I felt like you could assemble operating mechanism that would help scale a brand.
Yeah.
So these 3 things coming together is why I decided to buy a clutch of small brands. In the lifestyle space, I'm a big believer that fashion, beauty and home decor will be spaces that will grow sort of for the next 20 years in terms of compounding. Right? And therefore you can build interesting brands. Right. So that was the sort of thesis, right? These were the 3 reasons to start.
So democratization of distribution that, for a small cost of 100, 120 rupees, you basically can reach out to any part of the country.
Yep.
Consumers are spending more and more time online, so you can have direct connect with them.
And brand build through that.
Building brand, through that engagement.
Yeah.
But, the brand building also in some ways slow process.
Yeah.
Historically, the brands that we are familiar with, they are built over, 10, 20 years, very slow growth.
Yeah.
While in some ways, the approach that you took with Mensa was acquiring these brands and try to build, dozens of brands simultaneously.
Yeah.
So, what was the insight? What gave you confidence that this can be done in a highly accelerated manner? Yeah.
So, Mukesh, firstly, the journey is not done. So, I think we're still halfway through. Yeah. I think not even halfway through. We're 20% through. We're a 2.5-year-old company. It's a 10-year journey, right? I think there are 3 ways to answer the question. There is an 80-20 answer, right? With the 80-20 is we have 20 brands that we bought.
Yeah.
I would say 7 of those brands are now 80% of our revenue, and they are the breakout brands. Right? There is another 7 that I think have the potential to be a breakout, and then there are others that we will consolidate into these 14. So I think there is real focus. Just to give you an example, Dennis Lingo was a 30-35 crore business when we bought the business.
Yeah.
In call it 2.5 years, it's 150 crores.
Yeah.
Right? And it's a positive EBITDA business. Right? So I think that is sort of, so you have to focus on a few and sort of do it. Second is there is massive synergies in creating a house of brands as opposed to a single brand. And I want to call out 3. The first is tech. And tech is impossible to build only for a single brand. If you can actually build out platforms for pricing, ads, etc., you need a stronger tech team. For one, it's difficult. Second is if you believe content and community are a way to brand building, we have Men's XP and IDVA, which have 20 million monthly actives. We use that as a horizontal and we're able to sort of make that happen. The third is operations, which includes everything from warehousing, logistics to sourcing. I mean, you're very familiar with fashion, but For example, it would be impossible if Dennis Ring were a single company or a single brand to be able to buy from Vardhaman or Arvind in terms of fabric, or be able to get the kind of rates in sourcing that you would. So there is real synergy by actually having scale across, right?
Got it.
So I think those are the platform synergies.
Understood.
What you have to do is to, by the way, keep the focus still on design, and brand building has to be at the brand level, and that still needs to be kept separate.
Fair, got it. And maybe that's the big difference in the D2C has attracted a lot of interest, and I'll come back to that in a minute. But a lot of D2C brands also get stuck in that 5, 10, 20 crore range. It's just not able to break out.
Yeah.
So what I'm saying is, by building those horizontal platform capabilities, you are able to create a journey from 20 crores to 100 crores, which some of your brands are already there.
Yep.
And I guess after, 100 crore plus brands in India, you are meaningfully sized. Then
That's
you can
right.
just organically keep growing from there on at a pretty healthy
That's right. You get to that escape velocity, if you will, by doing this. I think the other thing, Mukesh, on the 20 to 100, which I think is not easy to explain, but I would say, I think quality of talent. I mean, we have spoken about this many times. It's very hard for a single D2C brand to hire the kind of talent that you would have hired maybe in a Myntra or a MedLife or wherever. But if you have some skill, your ability to attract great brand managers, great marketing people, great tech people is very, very different.
Right.
And that again adds to this acceleration.
Got it. So I think, see, you are in some ways very privileged position. You've been able to raise a lot of capital. You've built an engineering team.
Yep.
You've got all these platform capabilities. I'm pretty sure, your brands will do well. But in last 4 or 5 years, in general, the interest in D2C also kind of gone through the roof,
Yes.
Pretty much every, NIFT graduate dreams of building a brand. It's somewhere the allure of D2C, direct to consumer, is that you build a brand, you list it on all the platforms like Flipkart, Myntra, Nykaa and so on, and you've got distribution, and when you do, you start getting some sales. But also, as we earlier, we discussed, it gets stuck. How should there are probably tens of thousands of people who are trying to build D2C brands.
Yeah.
But they will not be able to raise money like you did, or they will not. So, how should they approach it?
I think if I take 0 to 20, 20 to 100, and greater than 100 as the 3 buckets, I think sometimes people confuse how you grow, and I think that's a problem. So if you basically grow through subsidy, and when I say subsidy, there are 2 areas you can do. One is you can discount, and the other is you can do performance marketing.
Right.
If you grow primarily through those, the base revenue itself is not stable, because the minute that goes away, it sort of falls. So I would say if you're a 0 to 20 crore D2C entrepreneur, the key is, does the product sell itself? I mean, and Mukesh, incidentally, I met 840 entrepreneurs to get to these 20.
It's not even 840 days since you started the company.
Yeah, but I met 840 people, right? So it's quite startling, because the ones that eventually worked is they created products that had genuine pull. So 0 to 20, you have to focus on the product. You have to focus on basically repeat rates being genuine repeat rates.
Right.
And reviews and ratings being genuine. So you have to be able to grow 0 to 20 to that. I think 20 to 100, you have to get really effective and efficient with performance marketing and growth hacking of platforms. Right? Yeah. And you have to be able to go from a single product, or call it small SKU concentration, to a larger SKU concentration and making it work. So those 2 skills become important, which is why these ads platform, pricing platform, etc. become important, because you can't go from 20 to 100 without being more efficient and effective. As well as, Mukesh, basically go from, so if I take a Dennis Lingo example, the person who started this brand sort of had it with 4 or 5 SKUs. They had 4 solid shirts, and they were selling on Amazon. Maybe there were 20 options across everything, right? We have gone from 20 to 600 options. Now that level of complexity, you have to be able to manage and handle. So product development complexity and performance marketing efficiency get you from the 20 to 100. 100 to 500, you have to go from push to pull. Here, essentially, you have to get, one is push to pull, which is very brand oriented, which is, can I do effective brand campaigns and community and social and all of the rest? And we can talk more about it. And the second is offline, which we haven't spoken about, but in my view, more than 100 crore business in India. If you don't have offline, you can't go from 100 to 500, right? And, MyFitness, for example, is one of our peanut butter businesses. We got, the original business that we bought was, doing, call it 5-6 crores a month. It's now doing 12-13 crores a month. But 40% of the business now comes from offline, which has been started, right? And I think without that, you don't cross that 100, 150, especially in the beauty FMCG space.
Got it. Got it. So breaking down the whole brand building journey into these potential 3 scale phases, sub 20 crore, 20 to 100 and 100 plus, and probably very different strategies and different capabilities for each of those, right?
Yeah.
But look, when thousands of people are starting, the 840 brands that you met, all of them will not get to 100 crores.
Yes.
But I think for a lot of those brands is getting to 5 crores, 10 crores, running a profitable business, and organically growing 20% is also pretty good outcome, right? And that's
right. That's right.
That's, kind of camp one that all the aspiring D2C, brand owners should aspire to get to.
I think so, Mukesh. I think there is the entire segment of venture capital, private equity funded businesses that have to grow at a certain rate and get to a certain outcome and so on. I think which is all good. But out of the 840 that I met, maybe 10%, 15% had been funded. Yeah. The others had all organically generated enough cash flow to be able to grow the business. Right. And I think that is the real game at some level. You should be able to grow and you should be able to actually make it self-sustaining, including working capital. And I think it's very possible.
Yeah.
I think the only sort of thing I would advise is unless you have 65, 70% gross margin, right? As a starting point in beauty and maybe 50, 55% gross margin in fashion.
Yeah.
It's very hard to make that happen. So it's a gross margin business where you have to start at the right price point with the right COGS in order to make the rest of the costs work.
Got it. And I think that gross margin delta in some ways a proof whether your brand has, some, pull or
has
not.
Pull or not, right? Correct.
Yeah. And just to translate it, just for the, for the listeners to be fully clear, right? What you're saying is if you're selling your product with 1,000 rupees, your cost of goods should be less than 400 rupees. And that's not 1,000 rupee MRP, but what customers are willing to pay you.
Average selling price.
Right.
Post a discount.
Until you get there, then you are really not a brand and it's not going to have defensibility and you don't have enough surplus to invest in marketing or other common capabilities. And so on.
Exactly. So you have to have that margin, if you will, to be able to invest in capabilities, branding, everything. Right?
But other thing, that again, the early stage D2C entrepreneurs struggle with the customer acquisition. Even if you have 60% margin, if you're spending 1,000 rupees or 2,000 rupees CAC on Google or Facebook, that's also impossible game to win.
Yeah. So, I have multiple thoughts about this. So, firstly, I think a fully 100% D2C business is very, very difficult to sustain, which is all, by the way, your own .com website. Because the amount of money you pay Google and Facebook with the repeat rates of the average Indian consumer becomes very difficult to manage. So one thing that is a marker of success for me when I looked at early stage brands and now even as we think about it is, do you have the right mix between e-commerce platforms, D2C website and offline?
Yeah.
And I think that, by the way, automatically adjusts your CAC. Because the CAC, what does Myntra and Flipkart do? They've got concentrated traffic, right? Therefore the CAC is automatically lower. Right. You may pay advertising, but the CAC is already lower, right?
Yeah.
So I think having a mix of that is important. Second is, may not be possible for all D2C brands, but one of the things we are attempting at Mensa is we own Men's Experience. I'm a big believer that content to commerce may not happen, but content to community building and brand building can happen.
Right.
So if you can do brand building less expensively, then the more brand you build, the less CAC you play, right? At some level, because there's a pull for the brand. One simple metric we use for our top 7 brands is how many brand searches are there on Myntra or Amazon or Flipkart or Nykaa. And is that going up year on year on year? And if the answer to that is yes, then automatically your CAC over time will come down.
Right.
Because people are searching for your business.
Right. So the brand owners need to invest in something, whether it's content or community or something which is not a paid vehicle.
That's right.
Which starts to attract its own audience over a period of time, right?
I think so, Mukesh. I think if you don't have some source of traffic that is organic, I think it's very difficult.
Yeah.
And I think the second is this business model and being very clear that some amount of it will be your own traffic, either paid or unpaid. And the rest of it will be how do I leverage more efficiently traffic that exists elsewhere, which is on Myntra, Flipkart, Amazon, Nykaa. I think both these are important.
There's one thing I'm not able to reconcile in my head, Ananth, is there has been a lot of hype about D2C. I also genuinely believe that time has come and we will see a lot of 500,000 crores homegrown brands. But simultaneously, let's say, I don't know, Mamaearth, Sugar Cosmetics, there are very few of those. I guess Muscle Blaze, that Health Card has built is now 700-800 crore brand.
Yeah.
But very few so far. And maybe, some of your brands will get to 500-600 crore range in coming years. But then handful, you can count them, where are all the other, when is the true D2C revolution going to show up?
Yeah, no, I mean, actually the statistics are quite startling. I mean, all of us being entrepreneurs, I think you can look at the glass half full or half empty.
Yeah.
So today, if you take total number of brands, there are over 1,000 crores in fashion, beauty and home. There are less than 35, offline plus online. This, including Unilever.
This is the brands have been built even over 100 years, put together.
All put together is like subtotal of less than 35. Okay. If you look at D2C brands, which are new age brands, there are over 100 crores, right? Which is the other metric that we were talking about. That number, by the way, is 45. It's actually quite startling. It's only 45. Right. Mensa, incidentally, we own 7 of the 45. Right. So I'm just saying it's actually, so the question is why? And I think it goes back, Mukesh, a little bit to the skills being different for the 7 to 20, 20 to 100 and 100 and above.
Right.
And if you don't see, even in, you've seen this in Myntra and Profit and everywhere. I think every stage requires a different set of capabilities and team.
Yeah.
If you're an entrepreneur who's a solo entrepreneur owning the business, you don't change the team.
Yeah.
You sort of continue.
Correct.
And that allows for only a certain organic growth. Right? I think that's one. The second, Mukesh, is I think you have to create sustainable businesses from the beginning. And I think that takes a lot of discipline, which means getting to positive CM2 and EBITDA at the brand level.
Yeah.
All our brands,
Right.
maybe with one exception of the 20, are EBITDA positive, including cost allocations of the people that work on this brand.
Yeah.
And I think that discipline is very hard to come by. Because if you do that, then I think, growth slows. So one of the things is, if you take a lot of subsidy-based growth, I think it hurts you in the long term.
Yeah.
You get very quickly, Mukesh, to the first 200, 120 crores, but it's not the right 120 crores.
Yeah.
Right? And therefore, then the 120 to 500 acceleration doesn't happen.
Right.
Because you have a baseline that keeps going down, right? And you have to keep putting more money to get the baseline up.
Yeah.
I think, therefore, building that 100 crores with positive unit economics is critical in order to get to 500. Otherwise, the amount of money it takes to build, it becomes too high.
Well, today at least 21 may be different, but now no one has that extra cash available to subsidize brand building. So people have to do it.
You have to do it the right way,
right? And the right way. If you let's take example, Mamaearth and Sugar. What's a brand which is stuck at 10 or 20 crores? What is the fundamental difference? Why are so many people stuck at that and there are so few we have really broken through?
Yeah, so Mukesh, the first is product development is difficult.
Yeah.
It seems very basic, but everybody talks about an apple cider vinegar or, in the case of MyFitness, we talk about chocolate peanut butter, but it takes a lot of iterations to get the product right. And that takes real time. And I think there are very few real, I would say, distinctive products. And truly distinctive, which means the product is genuinely better, right? And I would say, for me, for example, genuinely better is, in a blind test, will you be able to pick this out? If you go back a little bit to my other hobby of wine, you have to be able to blind taste and say this is better, right? And I think getting to a product that is genuinely better takes some effort.
Yeah.
And I think most people are okay with average because the average sells a little bit,
right?
But it doesn't help you break through. So that takes time and takes real R&D, real effort, real product development effort. And I think not enough people do it. The second is what we spoke a little bit about, which is a source of traffic and community.
Yeah.
That takes, again, time to build. And if you don't start early, the cost of doing that goes up dramatically. Right? And I think that's the second problem. I think the third, the second problem, just to be very clear about it, is you don't invest enough in brand building and community early enough. And therefore that catches up with you. Right? I think the third is the founder and maybe the management team not basically thinking hard enough on what change needs to happen in terms of talent. Right? For example, again, I keep coming back to MyFitness as an example, but just for us, unless we hired a good national sales head for offline retail, it's not a skill that an average Mensa person has. So we had to hire the right talent and get someone senior in who we are not familiar with and it's uncomfortable, right? And therefore making that investment has been really helpful. And we've got a great guy in who's really helping grow and scale it. But that is a difficult thing to do when you're in a comfort zone.
Got it.
I think these 2-3 things are the reasons why it doesn't happen.
I think what I'm hearing is, while in D2C, starting is easy. You have a point of view, you find a vendor, get something done, design a nice logo, and follow that list on, Flipkart, Amazon, etc. But to really build a brand, the whole diverse set of skills are required. You have to obsess about products, spend time in R&D. I think blind test is a great tool. I think, probably all D2C brand owners should do that and really see if customer is able to pick out that there is something unique. And
without the logo, right?
Without the logo, right? Yeah. Taste is different, or the feel of the fabric is something has to be right. And then you have to be financially savvy. You have to really understand how you're going to build that customer love and engagement and so on, right? And then all those are
correct.
Difficult skill for one person to master.
Correct. Which means, by the way, you have to keep thinking of the team as well, which is not something that comes naturally to many people, right?
Got it. So this opportunity is real, but I think we probably need maybe the ecosystem around that needs to probably mature a bit more.
And also the fact that I think people need to say, look, you pointed it out earlier. Maybe brands take 25 years to build earlier. You can accelerate it to 8 to 10 years. You can't accelerate it to 2. Right. And I think being aware of that and saying that I will sort of stay through cycles and compound. This yearly compounding is like the most important thing, right?
Yeah.
Just adds up.
No, 100%. Right. I think, it's, I'm now forgetting who was telling me, but actually Lalit from Grow, he was asking me and let me I'm going to quiz you real time, Ananth, on the live camera. How many companies do you think in the world which have compounded at 25% for 25 years? Take a guess.
25% for 25 years. In terms of growth.
Yeah. Top line growth.
Must be a very small number.
Yeah. Take a guess.
Sub 10.
That's right. You're 100% right.
Yeah.
So sub 10 saved you. It's only one.
It's only
apparently
one.
Amazon.
Amazon. Yeah. I was going to guess, by the way, Amazon.
Which is, so that's the power of compounding. That's such a phenomenal thing. People can pull out their calculator and do 1.25 is 25. It's a very, very big number. But, that's, I think that's, especially for brands. And I think, look, you are on Marico board, they have some of the amazing brands.
Yes.
The same compounding story, right? A steady 10-15% growth year after year, decade after decade. Right?
It's just huge, right? Parachute. By the way. It's like become hair oil. If you think hair oil, it's parachute.
Right.
And so that takes 20 years of compounding. Even if you do 20%, if you do it consistently year after year after year, it just makes a big difference.
Do you know, when did Parachute start and how big are they?
I know both. Yes. So roughly they must have started... it's almost north of 30 years now, right? I think they're very large.
Yeah.
Marico itself is sort of, call it a little over $1 billion in revenue. This will be a large chunk.
Right. Got it. Yeah, so that's the power of, this is a simple product.
Yeah.
It's basically coconut oil packaged in a blue bottle.
Correct.
But delivering certain value proposition consistently, speaking the same brand language, growing consistently, not trying to arrive somewhere in a hurry. And now there are hundreds of millions of dollars worth of revenue for one brand.
And by the way, Mukesh, going back to our product innovation point, people don't realize this. Before Parachute, oil was sold loose. You had these large tin cans, and people would go and get a little bit of oil from those tin cans. They basically came up with the packaging. They came up with the plastic packaging. They were the first ones in plastic packaging. They were the first ones who basically said, I will make a brand out of loose oil. So, you don't realize it now. But I think there was deep product innovation, packaging innovation, and a brand created from an unbranded space.
That's right. And unbranded, you will not have consistency of quality. You don't know from the those tin cans, when you get good one, bad one, right?
Correct.
But so as a brand, you're able to promise that.
Yeah.
But maybe there's a lesson in that for just probably all D2C brand owners need to really think long term, which is painful.
Yes.
But probably necessary. What is this? I also want to talk to you, from the price point of view.
Yeah.
Are there how should the D2C brand creators think about whether to play in the premium segment or more accessible segment or even really affordable, value segment?
Yeah, so, Mukesh, I have a point of view that in India, if you don't play in the mass premium space as opposed to either mass or premium, it's very difficult. I think true premium and luxury in India, very small segment today. And anybody who can afford it can travel. And therefore you can buy it in New York, you can buy it in London, you can buy it anywhere else. So, and it's generally, by the way, more also offline based because you need touch and feel. Anytime you want to buy something more than 10,000 rupees for a single item, offline is always an easier channel because you want to touch and feel. You don't buy it online. Right. I think mass, it becomes a difficult proposition. The reason is it is a true very low gross margin game. Again, going back to our earlier thing, right? Yeah. If you basically source something at 250, if you're in the mass, you have to sell it at 450.
Yeah.
The economics of the channel generally don't allow you to do so, which is why also you have a lot of these have private labels. That's why Amazon has Amazon Basics. Myntra has not just brands but labels as well, right? That actually do some of this. So it becomes very hard to sort of play in that space. So you have to be able to get, Mukesh, that 3-4x on your cost of goods, on what your product you're buying. If you're not able to command that premium, I think it's difficult. Also, I would say, obviously category dependent, but in fashion, 1,200 rupee ASP allows you to build.
Right.
A 500 rupee, much harder. In the case of beauty, if you take a face wash, if you sell it at 300 rupees, you can build a brand. If you sell it at 150, very hard to do because you have no ability to invest back in either community or brand building or any of those that we spoke about, or even product R&D.
Yeah.
If you want to put our MyFitness brand sells at a 40% premium to all the other peanut butter. And we're an online first brand and we sell it at a premium. And I think because the product is superior.
Yeah.
Right? And so that's important. I think it's very hard to play in the complete bottom of the pyramid, I think, and build a brand. Yeah. I think the only examples I can think of are like Primark in UK or Costco, Kirkland, etc. But they're very different places. They're all private labels of very large retailers, right? Which doesn't exist today here. Maybe a DMart will do it or whatever, but hard for us.
This price point is a very important consideration. Probably think very hard and deep about, whether which can enable both the 60% margin, as well as within reach of most consumers, say
correct.
At least top 100 million households in the country.
No, correct. And it's very sensitive. If you basically go from 1,200 to 2,000, it's a difficult problem, right? So I think you have to sort of play that game, I think, very carefully and very thoughtfully.
Right.
I think the two interesting things that have happened is the market for especially lifestyle products.
Yeah.
Because they're also in that 1,000, 2,000 range has opened up dramatically because of e-commerce, quick commerce, etc. Otherwise, reaching them through offline retail was very difficult because it's a diverse, dispersed set of people, right? Now you can have stores in the concentrated demand segments and you can reach the non-concentrated segments through e-commerce. And that is an interesting combination.
Do you have a point of view on the different archetypes of these D2C brand entrepreneurs? One is people who are fashion school graduates who have a point of view, they can create these, interesting patterns and so on, right? There are these B school types, they look at the market sizes, 20,000 crores, growing at 12% CAGR. These are price points. So this is the sell, I'll go on, typical McKinsey type of analysis, right? Then there are these power users who are, maybe I'm a gym buff or I like yoga or, and I feel like I can create a product for people like me. And then which archetype, tends to do?
I think it's a great question. I've never thought about it. I would say, they can all be successful, clearly. Before I met you, I don't think I knew anything about fashion. I wore only blue shirts. But everybody can learn, right? So I think that's possible. I would say it's very hard to succeed without a product focus. Between the three, I would say, if you're not, you don't have to be the guy. I would create maybe a fourth archetype. The person who's passionate about the product, or maybe it was your third archetype, right? The power user thing. You may not be the designer, but you need to have a sense of product aesthetics and a feel, and you need to be very passionate about it. I don't wear anything other than my brands. I don't like, in Mensa, by the way, if somebody's like, you can't bring another peanut butter and eat it, right? It's just, it's those things, right? You have to be very passionate about the fact that they're your brands. And so product, I think, would be, if I were to choose between them, I would say passion for product would be the biggest one to.
So you literally live and breathe, the product you're trying to create, and at least you'll be the power user as well as expert on
power user and expert over time, right? You have to become expert on something over time.
Got it. So Ananth, this is, just going back, let's zoom out, I think in many different industries, even today, 7 different brands in very different categories. So I can't even imagine what your day-to-day looks like in terms of context switching across fashion versus, party brand versus protein brand and, and perfume and so on, right? But even before that, you spent 2-3 years in the, online medicine delivery space. And then, for multi-brand retailing, Myntra. It's just, how has been this journey for you to get into new industry and understand the whole dynamics of that and trying to either run something or build something?
So I think, Mukesh, firstly, on the Mensa one, just to clarify, it's actually much simpler than you think because it's only 3 spaces. It's fashion, It's beauty, FMCG as one bucket, and home decor is the other bucket, which is where party celebrations, home decor, etc. fall in. So it's not that dramatic. But coming back a little bit to the learnability point, right? Firstly, I think it is important to compound. So I don't know how to explain this, but the more times you learn, the better you become at learning. So, it's just, when I first came to Myntra, it was really hard because I was learning both a new industry and a little bit of a new way of operating as opposed to advising. When I went to MedLife, while the industry changed, the operating was the same, fundraise was the same. Right. So I took away one degree. When I started with Mensa, the only difference was I knew fashion, beauty from the Myntra days. Yeah. I knew about how to raise money and do a little bit of, actual operating and taking risk, etc. through MedLife. The only difference was the extent of the risk and starting something. So I think it compounds also over time. Yeah. It's not like, it just builds up. I think that's one. Second is, I think the tip that I have for learning is you have to learn one thing deeply at a time. It's not possible to learn many things simultaneously, shallowly. Right. You may or may not remember this, but, in the Myntra days, I used to meet with a Nihal. I'm sure he didn't particularly enjoy it, but every Saturday, I used to spend an hour and a half with him going through, and him and Gautam and all these, going through WGSN. I had no idea, right? Yeah. But over 6 months, you suddenly figure out that you were also saying, okay, fabric is like this, there's some pattern, this color is going, etc. But doing one thing like deeply over a period of time, I think is the only way to really learn. Got it. The second is the best way to learn is to do. Right? So I think there's reading, there's listening to podcasts, all of that, but I think quickly moving beyond that to actually doing is helpful. Yeah.
I'm glad you brought this up because I feel like, for an entrepreneur, learning is a critical skill and compounding definitely plays a role over a period of time. And learning is transferable also. When you learn something, you also become better learner. Like, if you are not investing time and effort in learning, you also but very slow learner, right?
You start stagnating.
And in some ways, you had an advantage even before because McKinsey also, you're going from project to project. Right? So you have to learn something new every 6 months, and then that's played out for you last 10 years as well. Yeah. But it has to be a conscious process. Like Monday to, in your example, Monday to Friday you are doing day job, but Saturday you're meeting with these guys. Folks who doesn't know WGSN, it is a trends report in the fashion world. That's right. People know this, and it's all these guys. Actually, I don't know how do they do it, but they try to have this projection about next 2-3 years. What is going to the cool color of next 2-3 years going to be patterns, but it's fun. Fun days to read. But you are investing, effort above and beyond, what the everyday job required. Other thing I recall, which I've seen constantly, they are pretty intense on a day-to-day basis. I think Myntra also, I remember he used to run these daily sales calls. Yeah. And I think, same here in Mensa, I think you talked about, the intense focus on numbers, top line, bottom line. Yeah. That's just more just you, like what comes
So I think it's a learned skill as well. Obviously in a McKinsey kind of context, I had none of this. So I think I started this because I was overcompensating, saying I was worrying about being a consultant who's not day-to-day focused. Yeah. So I started the daily call. Yeah. That's how the Myntra one started. I found that it actually works for me. And I started to like it because you have the daily rhythm. But one thing, Mukesh, is I also try, I think, a little bit again, our conversations used to be, right? I think splitting the mid to long term from the day-to-day is important. Yeah. So I carve out real time every week to just think about what can happen 2, 3, 4 quarters from now. Right. Because you have to have the balance between the two. Yeah. But the daily intensity, I think in the e-commerce D2C world is important. Yeah. Because one day that goes away, never comes back in terms of demand also. You've actually lost that demand to someone else. Yeah. You don't realize that, but you think you'll come back, but that demand is gone. There is some consumer who's bought some other platform or some other product. Yeah. And therefore this rhythm of day to day is quite important. I still do the daily calls. Right. I still send out a weekly email. So none of that has changed from the Myntra days, but I still do it.
Well, give us a little bit of flavor. What happens in daily calls?
So I think everybody sort of, me and the direct reports talk through a little bit of what are the day's priorities, right? I think that's one. Yeah. Second is we discuss if there are any major issues, right? So if something happens, so I'll give you an example, Mukesh. Amazon in the US changes something around pricing or algorithmic or, cost of shipping, right? There is an ability for a larger organization will react very slowly. Somebody in logistics will pick it up. Then, by the way, they will put some email down and say, this is going to be the impact over the next 6 months.
Right.
Some guy in finance will basically then say, okay, it's going to take so much time. Let's figure out what the debate is. Here, the 5 or 6 people that can make a decision are all there. We make the decision in the call, right? And therefore, the speed and pace of the organization changes. Right.
Absolutely.
I think that's the other thing that it's a side effect, but it actually really changes the velocity.
No, absolutely. And that's amazing. Say partly, from a distance, entrepreneurship, looks very glamorous and about, this big, air castle building. But I think this everyday rigor is extremely important, especially in retail. I think there's this whole saying, right? The retail is detail, right? Yeah. So, and this is, on an ability to gauge where things are literally on a daily basis. And taking those micro calls to make sure that, as you rightly pointed out, like day lost, that's going to come back, right? So I think that's probably not only in retail, but I think most entrepreneurs can also benefit.
I would say most entrepreneurs, I think it is a thing, right? I mean, even if you're doing a tech product, right? I still do a tech weekly review. I mean, I used to do a product review in Myntra. I do a tech review here also at Mensa, right? And every week, by the way, whether there's a sprint, the question is, what have you done? What are the issues, right? It keeps the velocity in an organization going. I think.
Yeah. Amazing. Just do you miss your McKinsey days?
The short answer is no, I don't. There are parts of it that I miss, but not the whole.
Okay.
Right? The parts that I miss are, one is, look, I mean, McKinsey is a partnership. So you don't have a boss. You don't have a board. You sort of operate at your own pace. You can do 2-year things, you can do 1-year things. I mean, at some point, McKinsey will value whether it's useful or not, but, you have complete freedom. I think, we have both done this. I think as an entrepreneur, you have lots of accountability to shareholders, you have lots of accountability to your people, you have a lot of accountability to your customers. So I think the stress levels, I think, etc., are much, much different. But here I feel like there is direct creation, right? I mean, you can go back 2 years, 5 years, 10 years, and you can say, here is something that you've actually, along with a team, you have helped create. And there is more direct things. So I enjoy that more, I think. I should have done this sooner. But I think the no boss and a little bit of a long-term view on McKinsey, the partnership thing, I think is one thing I miss. I think second is maybe quality of people. See, I think the business model, you shouldn't say business model, but the McKinsey model allows for hiring fabulous talent all the time. And I think the model works on great people. Here, I think you have to get normal people and get them to be superstars. Very different kinds of motivation. How do you actually think about people and motivation is very, very different. So I think that's also different. I think these are the two I would say.
So Ananth, Mensa is a very interesting story. You guys, you founded the company in 2021, which was the era of super easy, cheap money, 0% interest rate, a lot of capital, and pretty much everybody in the ecosystem who was able to raise huge amount of money at insane valuation. And from 2020 onwards, as monetary policy tightened and reality set in, things have become much harder for especially for late stage companies. Practically a funding winter for last 18-24 months. How do you process that? Not necessarily for Mensa, but for the ecosystem in general. How should most company, you think, should navigate this period, and what's ahead of us? When does the winter end?
So maybe taking a real step back, Mukesh, I think public markets for tech companies have corrected. Right? SaaS multiples have come down. Right? Many other multiples have come down, etc. Right? So I think that's then a reflection into the private markets. Right? So valuation and multiples. You could be a 200 million company. You could have a 7 multiple or 10 multiple earlier, and maybe the multiple is 5 or 6 now, right? I think that's the new reality, right? So I think, I do think valuations are down, and the reason for that, just for everybody watching, I guess, is if you do a discounted cash flow model, which is what is the future cash flow, and you discount that back, if your interest rate becomes 0, right, was 0, then the terminal value was very high. If your interest rate, if you do an Excel model and you make it 5%, then valuation drops by 80%, right? So that's, I think, fundamentally changed. And I think that 20-year era of low interest rates, I think, is gone. So I think that's going to be, so valuations are going to be less. That doesn't mean valuations are not going to be there, right? So that's point number one. Point number 2 is if you're a late stage entrepreneur, I think the big thing is to make sure how quickly can the company get to self-sustainability. And for me, self-sustainability is not EBITDA. EBITDA is an invented metric, right? I mean, for a business that has to invest assets or working capital to stay in the same place, you have to look at really free cash flow. So the question is, how can you get to free cash flow positive as quickly as you possibly can, right? And what is the minimum amount of capital that it requires to get there? I think so. That's one. The second is, Mukesh, at least for me, one of the big lessons moving from sort of consulting to, a Myntra Flipkart ecosystem where actually we had a lot of capital at some level, right? I mean, to now is capital efficiency. I think how many dollars do you put to generate how many dollars of profit and free cash flow? And I think that's an important metric now to watch. And the question is, can you make it really, really capital efficient, right? And I think, so that's, I think, the big shift for an entrepreneur.
No, fair. I think I like, both points. One is I recall in 2013 when Myntra was having near-death experience. I was talking to Lee, Lee Fixel, and trying to get his guidance and support on, navigating that. And he mentioned that, what doesn't kill you makes you stronger. So I think these 2 years, will do that to a lot of companies. They will come out of it much stronger, survive much, much stronger, more, financially prudent. And actually, recently we shot an episode with Vani Kola, and she was also talking about capital efficiency. So I think this is probably a phrase which should get a lot more popularity. You also brought it up. I think people need to really think about what is the size of business I'm building by burning how much money. See, one of the most depressing stat that I've seen, and I've been very much part of it, is if you look at and most of the digital economy that got built in the country, the capital efficiency is measured by scale is 1:2. So people have put $100 million to build a $200 million revenue, or $1 billion to build a $2 billion, which is abysmal, which can never add up to, decent return on capital invested. So I think for whole entrepreneurial ecosystem in India, the next phase has to be about capital efficiency.
And I think it will create two things, Mukesh. One is, I think we will get, as a startup ecosystem, much more prudent about capital, which I think is good. The second is, I think you will attract a lot more public capital. India's public markets are vibrant. They are basically, there is, I don't say infinite, but close to infinite capital available for high return on invested capital businesses, right? So if you can do it, then you don't have to depend on private investment. You can go to the public markets and raise money. I mean, at some level, the reason you have a huge private market is because you're not very capital efficient, right? I think as you get more capital efficient, you'll see companies going public sooner and basically raising money if we need to from, which is a much cheaper source of capital at some level.
Fair. I don't know if I'm going to use a bad wine analogy here, but at least I've heard that, Ananth, that, and you're a wine person, will come to that, is the years when the rainfall is little, short.
That's a good analogy.
It's a good one, right? So the wines, which go through stress, they end up producing the best quality grapes, and the wine, end up with like really iconic wine from that year. Correct?
That's right. That's exactly right, Mukesh. I'm very proud of that. The fact that you've absorbed wine knowledge. I think
I learned wine from you. I've gone through my own ups and downs on that.
But that's exactly right. I think wines that go through stress produce the best. Grapes that go through stress produce the best wine.
Right.
Which is why Burgundy produces the best wine, because it's like hardly any water, and you have hailstorms in the winter, and the grape still survives, and you still make great wine. Similar for companies.
Outside, so which means vintage 2002, 2003 companies who survive will be like immensely valued company 5 years down the line.
I think so. I'm very, very bullish still, I think, on the overall ecosystem and the ability to create. I don't think that anything changes about the 10-year story. I think we'll get to better companies now with this funding winter than we did before.
So one of the earliest things, Ananth, I noticed about, when you start interacting, Myntra days or even before, you're considering Myntra, was your kind of undying passion for wine and wine collection. And I mean, the depth of knowledge, it seems like done a PhD in that area, and similar for, your interest in art as well. So it's just a personality trait that if you get into something, you really get into this.
No. So the quick backstory behind this is, look, I grew up in Chennai. I grew up with no alcohol whatsoever. So the first time I drank was when I was in McKinsey. So I think when I was like 23, 24. And I think therefore I had to make up for the lost time. So I sort of got into it quickly. But But the most serious answer I would say is all of us lead very high stress jobs. I mean, we have high stress lives. It is important to have one or two things outside of work that you're deeply passionate about. Not that you're trivial about. I mean, it can still be fun. I mean, I do lots of interesting wine trips. Today evening, I have a wine event with my wine group. By the way, my wine group has nothing to do with the startup ecosystem, right? I mean, they're all people in different walks of life, all of who are passionate about it.
What happens in a wine group? What do we do?
So, apart from drinking wine, what we do is we actually, it's called the Wine Connoisseurs Club. So you basically each bring a bottle of wine. You pick a theme. So this time there's a theme which is we are all going to drink wine from one region in France. Right? So everybody brings a wine and you describe the wine, and the founder of this group, the rule that he has is you can't make the presentation about anything that you can Google. So you have to actually call the vineyard owner up, or you have to sort of do some primary research and come with some interesting fact that's not Googleable. Right? You get made a lot of fun of if you just repeat what's on a website. Right? So we all present the wine and we all taste it. And like learning, wine learning is also compounding. The more wine you taste, the better you get at it, and so on. So it's actually, for me, it's a big source of de-stress, right? Because essentially you have a very different set of people, some of who think Amazon is a river, etc., right? As opposed to, not quite, but
it is a river also.
It's a river also, but what I'm saying, so it's a very different group of people doing a very different thing, right? And I think that's very important to make better decisions at work.
100%. I think, it's, I feel for all entrepreneurs, cultivating some hobby seriously is immensely helpful, and also taking you out of, that context that, completely buried, otherwise every full day. For me, fitness has been that space,
Correct. I was going to say health, right?
Hacking health in general, right? Golf at some point, obsessively into golf. But I think I would love to encourage, anyone listening to this, just preserve that one hobby, whatever time. It may take as little as 1 hour a week, right? Or can even take 1 hour a day. Both are fine. But having that space.
No, and I think you have to be mentally absorbed. The reason, you asked, why do I do it intensely? The reason is it takes my mind away from work. If you do it intensely, right, you sort of intensely focus on that task. It could be, you could go skiing. You could be looking at a new art collection, or you could be tasting a wine. But sort of, if you do it fully, it takes your mind away from it. So the key is not to be partially there, but to be fully there in that activity, right?
I think you've also told me you have some insane wine collection, different parts of the world.
I have about 3,000 bottles of wine, which, I mean, if you take my current rate of wine consumption, I will have to be alive. I have to use your hacking health book and live for 200 years or something in order to use, but
it's a bit of contradiction. You're not going to live
moderate amounts of wine.
Okay, fair.
Polyolefins.
Right.
Red wine, moderate amount on a weekly basis actually helps live longer. People in France live longer and so on.
People in France do live longer. Some part of France, this polyphenols, I don't know. It was a 20-year-old story, Ananth. I don't know. Science,
but research keeps changing.
Research keeps changing. What? So we were talking about the whole funding winter. But also there is looks like IPO monsoon.
Yes.
That's on the horizon. So that's probably a great thing, right? I mean, there are a bunch of companies that we are all familiar with, and hopefully it will change the narrative quite dramatically over the next 12 to 15 months.
My read, Mukesh, is I think look at the Zomato story and how it's played out. Look at the Nykaa story. Look at the Honasa story. I think these are all. I mean, we're at the beginning of the tech IPO boom, right? You look at the US, that Magnificent Seven or whatever has, I don't know what percentage of the total index, but it's like a very large percentage in the growth, right? I think that will happen over the next 15, 20 years in India.
Right.
Our tech exposure in both BSE and NSE is so small still. Right. And I think there is a massive opportunity. So I do think the public markets are the right way to go in the mid to long term.
Right.
For I think most of the tech companies. So I think this year is going to be great. I hope.
Right.
I mean, fingers crossed for a bunch of good IPOs, right?
And there is also a snowball effect, right? And as the company goes public, investor get liquidity, founders, employees get liquidity.
A lot
of them have enough cash, and we have seen this from Flipkart every time. There is a liquidity event. A lot more startups start, in this, Berendur APR area, right? That's the house price go up immediately. So with this, the 12, 15 IPO lined up for next 18 months, I think it should be huge unleash.
I think so, Mukesh. I think it will be very good for the ecosystem, for investors, for employees. I also think, look, ESOPs are not real till you get some liquidity, right? I mean, the reason all of us believe in it is I think we would through the Flipkart ecosystem and so on, right? And I think that is important. I think there needs to be some liquidity events that happen. I think it'll be great. The other thing I think is companies become more disciplined about performance, right? You are looking at now quarterly numbers, right? And your numbers are visible to everybody. And I think therefore it leads to better behavior, more discipline, etc., which I think is also part of growing up, right, as a startup.
Yeah, absolutely. So I think in some ways, it's obviously some of it is painful in the moment, but it's probably maturing the ecosystem quite dramatically. And if you zoom out again, things are really lined up really well. If you zoom out further, like the India story, it's getting to fever pitch. Ananth, I know how much you travel outside India now, but like both within the country as well outside, looks like everyone is watching, and like this is the next gold rush place.
By the way, I think and it's fantastic. If you're an entrepreneur, if you're a 20 to 30-year-old even thinking about entrepreneurship, you should do it.
Right.
Because the next 10 years, I think we've again spoken about this earlier, Mukesh. Where to play matters dramatically more than how. Both matter.
Yeah.
But if you're the best, I don't know, paper company in the world, right? It's not going to be so helpful, right? Then being or if you're in a very small country, it doesn't help. Being in the sort of startup ecosystem in the most vibrant economy, large economy in the world, I think is fantastic, right? Any way you look at it, we will go from whatever rate of growth, we will grow, say between 4 and 8%, whatever the number that you take and compound, we will be a top 3 economy, right? I think we have a very large young population. I think there is a massive, and there is a lot of capital. I think given what's happening in China, I think there is a massive amount of capital that comes in. The other very interesting thing is domestic capital has suddenly started taking real positions, both in startups, as well as in the public markets, right? If you think if you think about inflow and outflow, domestic capital has been more active.
Right.
The large Indian mutual funds are the ones that are funding all these IPOs that you're talking about, right? And I think that is also a very, very, very good phenomenon, I think.
No, I think this is, this whole situation is, I think it's so important, worth repeating. I think for youngsters, they may not realize it's not even a once in a lifetime. It's like once in 500 year, confluence of events and, all the stars lining up so well.
Yeah.
And the amount of just economic activity in the country over the next, 25 years.
Yeah.
It's going to dwarf everything up. Like whatever number, to your point, whether we believe we are going from 3 to 20 or 3 to 30 trillion. These are massive numbers. And are all going to play out in the next couple of decades, which, happen pretty fast, before you realize it. So
I agree. If you were in the 60s and 70s in India, whatever you did, it would be impossible for you to do what you're doing now, right?
Yeah.
So I think this is a very opportune time.
Yeah.
And I think the best time to actually... the other very interesting fact, Mukesh, in the Indian context is we're the only young nation left, right? Everybody else is aging. So demographics are also... So this combination of economics, GDP per capita going up and a young population is a very rare combination, right? I think McKinsey managing director Bob Sternfels had said it was India's century, right?
Yeah.
Not India's decade.
Right.
And I think that part is true.
Yeah. I think in addition to capital efficiency, I think this is a phrase, India century is also now gaining a lot of currency. And I think rightly so, and why not, right? We are 17% of the world population.
Yeah.
We've had, various, quirks of history, and just, 500 years ago, apparently India was 25% of world GDP.
Yeah.
And we've come down to, 3-4%.
Correct.
But there's no reason why it should not go back to,
Interestingly, by the way, the one nuance is when that was done, that was by a Harvard economist, I think, right? China was the largest, India was next, etc. But it was mostly agrarian economies. So GDP was calculated literally by number of people, because number of people determine agriculture.
Fair.
So now India coming back is even better.
Right.
Because I think there's tech compounding on productivity that is actually happening.
Right. And it's all kind of playing out. I think it's, and we can see all the effects now, we're growing every year. The infrastructure, improvement in the country has been staggering.
Yep.
The rise of India Stack, we did a whole episode with Ilkant on India Stack, which is other, this public digital goods, creating this whole massive digital rail.
Literally it's nowhere else. Both of us travel quite often to the US. I would say the payment system in India is so dramatically better, right? In terms of how you actually, with UPI, it is so easy to do anything.
Correct.
And from a roadside vendor to a shop to anybody, all transactions happen through this, right?
Yeah.
And even just the base infrastructure, I don't know if you've been to the new Bangalore airport. I think it's stunning.
Yeah.
And the Digi Yatra, you are there in 7 minutes from when you check into there.
Yeah.
I think all of these over time will also help really improve productivity. Right.
Right. No, it's a super exciting time. Do you look at anything beyond D2C brands, from investments, advisor, board capacity?
100% of my time is spent on Mensa. So I think that's roughly where I do it. And I've done now less investments than I used to. But if you think about spaces that are interesting, Mukesh, I still find education to be very interesting. I know education was going through a tough time as a sector and so on. But I feel like there is a massive opportunity. Second is healthcare. I again feel like multiple, if you think about folks who are growing very old and, elder care, if you think about precision medicine, I think there's like a whole bunch of areas. I think education and health, I still find that quite evergreen segments, and I continue to do some angel investing in them.
Excellent. Right? I'll maybe come back to health, but I want to also just follow up on this. Just talk about this EVs. I know you did a bunch of work in automobiles in India.
Yeah.
Probably, I don't know in your time, how much people are focusing on EV. I guess Tesla was still starting at maybe early traction.
That's right.
But the EVs have come a long way. We have homegrown stories of Ather and Ola, and now pretty much everybody else. Tata Motors have done an incredible job in EV.
Yeah.
Where do you think the whole sector is headed? And
So I also joined the Ola Electric board recently. But that aside, I think if I think about auto, I think the biggest prediction and the biggest issue has always been what is the rate of electrification, right? And what are the alternate models available that will also allow for it. So I'm very bullish on electrification in general. There are three big broad segments, Mukesh. One is cars, the other is trucks, and the third is two-wheelers. In India, it's a two-wheeler story. Because the two-wheeler form factor, electrification actually leads to lower cost per mile or per kilometer. And that is the single biggest reason why it will take off. Obviously today there's some subsidy and all that, and the subsidy will go away over time. But electrification in two-wheeler will continue to grow leaps and bounds. In fact, many, many years ago, I think it was 2013 or something, McKinsey had done an automotive sort of thing where we predicted 30 or 35% of the bikes would get electrified. And I think we're more or less getting there, right? Maybe a few years this way, that way, but it's happening. I think cars are a more complicated answer because the economics of the car need to work. And I think worldwide, there's a bit more of a slowdown, right? I would say sub 10% of cars today are electrified. And the question is, how do you make the economics work without government subsidy? And their cost of batteries, right, need to come down fairly dramatically, which has a certain curve to it and so on. So I think that's but the interesting thing would be trucks also. I know Tata Motors is doing it, but I think if you can get range anxiety and you can create infrastructure for charging, which is fast, right, then I think long range trucks also become quite interesting. So I think massive opportunity, Mukesh. I think India, has a real opportunity as well. Because I think our auto industry is still relatively growth oriented, right? It's still a large market, and I think there's a large amount of growth to be left. So I think there's a massive opportunity to, again, leapfrog a little bit from a technology standpoint. I think everybody's investing now in cell tech in India, which I think is a big opportunity. Again, everything was China once. Now it's starting to be India. So I think big opportunity.
And I think this broad area of, I think definitely EVs, in one space. But I think deep tech in general, I really believe and hope that in the coming decade, India will do a lot more of, more deeper tech-oriented businesses, whether it's EVs or semiconductors or batteries or, there are a bunch of interesting companies in the space sector and so on, right? So I think that will be exciting because in some ways, last 10, 15 years, there are many,
we have basically,
but we have, imported a lot of models from the West or China, etc. And not really innovative in technology. And now I think, with the AI looming on the horizon, I think it's probably big imperative for the country to invest.
And also, by the way, I think entrepreneurs have more confidence now. See, at some point, I still remember somebody telling me that you have to be X of Y in order to raise money, right? You have to be
X of Y.
Sounds
like a mathematical
Uber of something, X of something. Now, I think we can actually create those models. Hopefully, there will be like maybe an Ola gets created, right, in a meaningful manner, and that becomes a real example, right? Many of the businesses you're building, right, Graphic becomes the X of, that becomes the X, right? So I think there is a real opportunity in India now to actually do original things, which is I think what you're talking about. And the original things I think are, one, of course, Mukesh, is deep tech. But I also think even business models can be very original because you're solving very, very different problems in the Indian context, right? Nobody has cracked general trade at scale in India. I think it's an interesting problem to crack. Right. So many of those can also start to happen, I think, I feel.
Yeah. No, 100%. I think it's the good thing about India is no matter where you look at, there is
opportunity.
There's opportunity. And just going for D2C for a second, this whole China plus one thing happening and China shutting down and so on. Any implications and opportunities for your brands?
Absolutely. I think this is something we didn't cover actually. I think there is a huge opportunity for India going global. So today, Mukesh, about 30-35% of our revenue comes from outside India, in particular in the US and the Middle East, which are the two geographies where we're going after. We have a essential oils business called Majestic Pure. Right. So we are building a global aromatherapy business. Just think about that for a minute. Why did we decide to do this? We think that Unilever, P&G, etc. never went after this because it was a very fragmented space. India has always been exporting essential oils. But for manufacturing and formulation that happens in other countries and then gets sold. The question is, why can't we create a brand? Right? And therefore, there's a massive opportunity to create Majestic Pure as a global aromatherapy brand from India, as opposed to selling essential oils to somebody who's creating the brand outside. Because you now have the rails of Amazon, you have the rails of D2C. I'll give you another example. We have a relatively smaller brand called Folk Culture, which does high-end home decor, right? Folk tales from India and inspired from that, right? 30% of Pottery Barn at one point of time on fabrics, 20% on home decor used to be exported from India. But we never created Pottery Barn. What we're trying to do with Folk Culture is, can we create an Indian Pottery Barn from India that gets sold globally? And I think this opportunity over the next 10 years is quite amazing. If you look at Amazon, I think there was some interview that was recently done. They used to export $2 billion worth, a few years ago. That number is now 8 billion or something, right? And I think
Amazon from
India to the world.
Oh, wow, okay.
Right? Amazon global selling, right? I think there was I may be off on the numbers a little bit, but it's grown 4x. Right? So that I think is a massive opportunity for us. And in the US, there is a slight preference from a consumer standpoint not to buy from a China. So if you're basically saying made in India for a Majestic Pure, we are actually getting good traction.
Amazing.
And I think that really makes a big difference. So I think India going global for brands from India is a big opportunity. The other thing we talked about economics earlier is you can make a lot more money, right? Because you're basically selling a similar product, maybe with slightly different standards, slightly different labeling, but at 3 times the price, in rupee terms, and it gets good dollar rates. So suddenly your economics of the business also improve. So I think if you're an Indian D2C brand thinking about global opportunities from the beginning, it's a very interesting opportunity now.
Very, very interesting. I think, and that's why not? I think. I think last year I was looking at, Tanishq, they've been opening these stores in
that's right.
Silicon Valley in Houston, and there is massive lines around their stores.
Correct.
And,
Correct.
Insane profitability.
Yeah.
So for a lot of, actually for D2C brands, even a small fraction of sales coming outside of India. And to your earlier point, I think now those platforms are readily available, logistics available. You just need to have the, again, obsess about a product and, create that quality.
And create the quality, right? Because warehousing, logistics, traffic are all solved problems. You just have to worry about the product and the brand going global.
Amazing. Ananth, I think I want to thank you for taking the time. I think what you built at Mensa, I think it's inspiration to a lot of D2C entrepreneurs. I think it's a very unique story of its kind, this level of scale in such a short period of time frame. But also the overall your journey of, coming out of McKinsey and, 3 different avatars and doing well in all 3 of them. And just, maintaining your enthusiasm, your interest, your, everyday intensity, I think is very inspiring. I wish you all the best for Mensa.
Thanks so much.
Looking forward to all these brands becoming 500 crore brand each or 1,000 crore brand each.
Thank you, Mukesh. You played an integral part in getting me started. So thank you. Great.
Super fun. Thanks, Ananth.
All right.
At Sparks, we aim to bring to you stories of exponential impact. We share in-depth analysis of what goes behind success stories. If you find our conversations interesting, you can join us by subscribing to our YouTube channel. You can also listen to Sparks on Spotify, Apple Podcast, or any other audio platform of your choice. If you have any suggestions on who we should invite or what topics we need to cover, just let us know in the comments. We are always listening, looking for ways to improve, and keep getting better as we go along.